Much like the broader markets are, we've got the rand also managing to leverage off the hope that a resolution will be found over in Greece this week at least, and that the fact that we've seen China come through to loosen monetary policy, boosting risk sentiment overall. What are you making of the kind of firmness we're seeing in the local unit this morning? Of course, extension of what we saw on Friday's session.
Hi, Alishia. Yes, absolutely. We've been talking about, for a while about this swings in sentiment, the seesaw that markets seem to be on. So the mood seems to be very much risk on this morning. As you mentioned, it's a combination of optimism that Greece will finally secure that second bailout package after the EU leaders meeting today, and also the fact that China cut reserve requirements for banks, and that's despite much higher than expected inflation in January. It seems to be that they're taking more decisive action in a bid to support economic growth in China, and that, of course, is going to be positive for the global economy. So we're seeing a return of optimism, and as you mentioned, the rand firmly on the front foot along with other indicators of risk this morning. On the front foot this morning, of course, bearing in mind that we've also got some local economic data to filter through this week, inflation data amongst a lot, and that to come through on Wednesday along with the national budget announcement. So how's that having an effect on sentiment right now and impacting the local unit within this global context where we've got all of these global factors simultaneously at play? We haven't seen much of an impact in terms of sentiment this morning. The two factors we mentioned, Greece and the Greece and then China, seem to still be very much the dominant factors this morning. And of course, the local calendar only heats up towards the middle of this week. So certainly it should be some sort of reprieve from the rand. It's been very much adrift and global currents and a victim of global sentiment over the last few weeks. So finally, we'll have some local data for the unit to focus on, and hopefully it'll take some more direction from domestic macroeconomic development. One can only assume, though, that with that national budget being presented on Wednesday by the finance minister, all eyes are going to be on government expenditure. Oh, absolutely. I mean, the budget is going to be absolutely key, and it's somewhat unfortunate that CPI also comes out on that day, because I don't think too many people will be paying attention to that release with the budget speech also taking place at the same time. But having said that, yes, government expenditure remains the main issue at the moment. We've had warnings by ratings agencies that South Africa could be in for a ratings downgrade if we continue on the current trajectory or if things get much worse. But I think the difficulty for government is that the finance minister finds himself needing to support growth, because the growth outlook for this year and next is not very promising, but at the same time also needing to take in a tighter rein as far as government expenditure is concerned. So it's going to be quite a difficult tightrope for him to walk. And of course, there have been a number of other infrastructure initiatives announced by the president in the State of the Nation speech. So I think this week's budget is going to be absolutely critical for the rand going forward. We've had most economists out there expecting a wider budget shortfall than government had previously forecast. Are you in line with broader market sentiment right now, or that broader view that sits amongst many economists out in South Africa right now? Well, our view is that we have seen higher than expected VAT receipts, mainly from corporates. So we would actually be bracing ourselves for a slightly smaller deficit than the minister had announced in the medium-term budget policy speech. And that, of course, could free up some room for government to maneuver. But I think as we just talked about, the fact that they need to rein in expenditure this year, it will be absolutely key. So the way that money is spent or reallocated, I think, is going to be one of the critical or defining features of this year's speech. So let's outline then some of the trading ranges that you've got pegged out, Nomvuyo, for this week. When it comes to dollar rand, what are you looking at? Well, with the rand firmly on the front foot, and, of course, the budget does present some event risk, but we do think that should Greece secure the bailout package today, then this risk-on mood should continue. And then if the rand can hold steady below the 767 level, then we'll probably see a move lower to target perhaps 758. In the reverse, should there be a spike in risk aversion, if Greece doesn't secure this bailout package this afternoon, then we could look to move higher into the 770 range. If we break past 772, then perhaps a move up to 779.